It's Brian Preston, the money guy.
But first, let's set the table, Bo. What I would like to do is go over some stats that prove, without a doubt, most Americans are failing on the wealth building process.
Yeah, so the first stat, this one just like, if you want to think about one that like makes our blood boil, this is it. 47% of credit card users carry a balance. That means 47% of folks who use credit cards make the decision every month, hey, I'm not going to pay it off in full. I'm going to carry debt from one period to the next. That is napalm to your financial situation. It's not what you want to do if you're making sound financial decisions.
You and I talk about, we give a lot of grace in the fact that we actually allow people to use credit cards. But approximately half the folks should go cold turkey and not even use it because they're carrying a balance. That is no-go land. Don't fall into that trap.
And so here's the second one. The average auto loan term for new cars is now 72 months. I don't know about you, Brian, but I think most of my friends, most of my peers I talk to, they don't even drive cars for 72 months. And yet they're taking out loans that will take that long to pay off. That's not a way to build wealth over the long term.
Well, what's interesting, if you go into the numbers on that stat of 72 months, a third of car buyers are also trading in cars that are underwater.
Like
so what you just said
equity,
is exactly right. People are not even driving them long enough to pay them off. They're actually doubling down on the debt situation by actually trading in cars that are underwater and rolling that negative equity into the next car loan.
If you've been listening to our show for any amount of time, you've heard this statistic before, and this may be one of the most frightening ones. 61% of Americans right now today don't have $1,000 in savings. Meaning, if they were to have a medical incident, if they were to have something happen to their car, their house, some sort of emergency, they could not come up with $1,000 today without going into debt. That's not a good thing.
People ask me, say, where do your stats come from? And we always share, hey, this is coming from Bankrate, these other research, but you can set your clock to that stat of $1,000 is going to be 59, 60, 61 every year. It's just depressing. I was like, how can people not get this straight?
And then the last one, and this is like for financial mutants, I think this is the one that really bothers you to the core. 34% of Americans don't get the full employer match in their employer-sponsored retirement plan. That means about 1 in 3 Americans just don't like free money. Yeah. They opt to walk away from free money every single pay period. Man, it's really hard, again, to build wealth if you don't just capitalize on the easy part of wealth building, the free money part of wealth building.
Yeah, we talk about it all the time. And realize when we're talking about people not getting their full employer match, a lot of employers are giving you 3%, 6%. I mean, so these are thousands of dollars each year that you get. Yet every one of you that's missing out on that employer match, if I offered you $20, $100, you would not leave the room without picking up your $20 or $100. But yet $1,000, $2,000, $3,000, you're just leaving on the table. It's a disaster.
So we know that those are the statistics. Those are some things that Americans are getting wrong. And meanwhile, right now we live in the technology age, right? Where there's so much information. I mean, you guys out there connecting with us via technology to learn about sound financial principles. So there's a very easy way to get information now. But the problem is there's a lot of information out there.
Yeah, I mean, we've shared with you guys, this is the greatest time to be alive if you want to start building wealth because everything is approachable and easy to get to. Technology has made all things accessible, but yet we're drowning in all this opportunity that we have. And we have some examples we want to show you on all the things that are pulling you away from the center of how you actually build wealth.
Yeah, here's a headline. Here's why cryptocurrencies are a better investment than stocks. You should participate in cryptos instead of stocks. Another headline is 7 ways to get rich without leaving the couch. And now it's just easy. And then this one, Brian, I thought was really interesting. This is a video and it says, how to become super rich and successful with binary trading. And I think most average investors think, oh, what? Binary trading, that sounds sophisticated. Must be pretty good. I should probably get onto that.
Binary trading actually came up for the first time to me in one of our TikTok reaction videos. So go check those out if you haven't. But I did think it was very interesting. I love that Daniel found this. If you look in the red box there that he highlighted, the red box is our highlight. You may lose most or all of your capital, and that boils down the problem with what's going on right now. So before we get into the steps, I do think it's important to boil down what is actually blowing up to where most Americans are making mistakes with creating wealth. And the first thing is that you're faking it until you make
That's
it.
right.
You're getting into debt. You're letting debt tear apart and turn compounding interest upside down where it's working against you. And the second thing is every huckster that's out there selling their system or getting a get rich quick, a lot of you guys are falling prey and going into that trap. We want to tell you the reality. What's funny is that I know business owners who are creating successful businesses. I know people right out of college. This is universal that good information is not guaranteed.
That's right.
We kind of wanted to walk you through what's the difference between the dreams or what's presented in the brochures versus reality.
And here's one thing I get frustrated with. We live in this world where we all have a goal, right? We want to reach financial independence. We want to have wealth. We want to get to the end of the road and have that, illustrated here, that big bag of money, right? I think what is happening today with public perception is most people think I have to find the rocket ship. I have to find that thing that's going to get me from where I am today to where I want to be as fast as possible.
To the moon!
To the moon. I don't care how aggressive it is. I don't care how wild it is. I don't care how uncomfortable it is. I just want to get there as quickly as possible. And I think a lot of people fall prey to believing that's the way that you build wealth. When in reality, what we have uncovered and what we've discovered both with the clients we work with as well as for ourselves is that wealth building most oftentimes, is not on a rocket. It's a steady walk up the mountain.
Yeah.
It is a stair step. It is one foot in front of the other, making sound financial decisions, small ones early on, and then they get bigger and bigger and bigger, and they compound and they grow, and you actually have a much clearer path to wealth than this rocket ship that may or may not hit the ending target.
Yeah, it's definitely not a straight shot like you would with a moon landing. This is definitely something where it's going to be a little bit of chaos, ups and downs. But we even have some stats that confirm this. I don't want you to take our word for it. We actually have the data that shows that there is a journey to this wealth creation process.
Yeah, so millionaires on average, this is according to Ramsey Solutions' National Study of Millionaires, millionaires on average, they saved and invested for an average of 28 working years, 28 years into their career before hitting that $1 million mark, before getting to call themselves a millionaire. And they usually did that around age 49.
Yeah. And then that even goes deeper. We do our own wealth study of our audience, and we have found that is confirmed. Most people are investors. They build it up in their employer retirement plans. Guys, there's lots of opportunity. Don't waste what's going on with your opportunity. And this is what I wanted to talk about my own personal journey. It was slow, and then it was very fast. When you talk about compounding growth, it is very much exponential, not linear. So when you're in your 20s, when you're in your 30s in that messy middle, it's going to feel slow. I'm telling you guys, when the building process keeps stacking and it exponentially starts growing, one day it's going to move so fast that you're going to be like, wow, what happened? Being in my 40s, I get that wisdom when I talk to my neighbors and my peers. We all talk about that phenomenon. I don't want you to miss out.
And Brian, it was so interesting. We recently came out with this new net worth template, and you and I were kind of going through it. We updated it for the end of last year. We were kind of talking through it, and it was fun, each of us looking back 10 years ago. And like, oh, wow. And then looking at 9 and 8 and 7. It wasn't like there was just one year you were down here and the next year we were up here. It is a steady and consistent walk, and I think it's supposed to be that way. We just don't have society and the media and the public perception reminding us that that's the case.